Peter, maybe they should tweet, or would that be even more confusing?
Well, actually, I have to say I have to defend them here. So I'm not a pharma guy, so I don't know exactly what the requirements for the pharma industry are. But when I look at particularly what the central banks are telling us, basically I think they're telling us two main things currently. One is, in this environment that we're in currently, we have this Phillips curve argument where we have low unemployment and therefore eventually wages might rise. And secondly, we have financial stability concerns. And we got to talk about both of them. So I think they're actually pretty clear. Now, obviously what they don't know is if they do this, what exactly will happen, but nobody knows. And I think they're saying pretty clearly, you know, this is what we think is the likely outcome, and therefore we're doing what we're doing. So I don't agree with that.
Yeah, me too. And also with monetary policy, there's always two sides to the story. There's always winners and losers, and they have been clear about why doing things like QE has been necessary, even though it's penalised savers and pension funds and so on. So they're on very thin ice. They don't necessarily know the consequences of all that they've done, but I think they've done what they can to try and explain it.
Yeah, but Peter, at the same time, we're data dependent, but the markets only follow, you know, if 10 Fed presidents talk, then they start believing them.
Well, that's right, but I think the market is also very clearly focused on those key decision makers. I mean, when you talk to investors, when you talk to trading floors or what have you, it's always the Yellens, Dudleys, Fishers that have way more sway over the market than some of the others. So I think, you know, it's not necessarily right that you have sort of a whole spectrum of independent voices that just go in all different directions.